welcome to another acysecurities tutorial. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now today we're going to be talking about fundamentals in trading. We're going to look at some of the ways that we might trade, especially considering where the data might come from, news events themselves, and how certain news events actually influence and affect price. But we're also going to look at the idea of how an economy operates and what some of the news or the data that we might look at that would help support our ideas for trading. So the first thing I want to cover for us today is the idea about there being two sides to a coin. Now when we think about trading, and we especially more specifically when we think about currencies as pairs, we look at the idea of opening ourselves up to having two economies that we need to be acutely aware of and understand. So in understanding one side of a currency, we need to think about it. So the easiest way for you to start doing this would be to think about wherever you are locally born or where you have your domestic currency available to you and what is going on within that economy. So for me, that's Australia. That's where I'm from. So looking at that, I think about, okay, well, what influences are going to affect the value of the Australian dollar? Now, when we go to trade it, it's always paired up with something else, the other side of the coin. So looking at the AUD USD, then I would have to consider everything that's going on in the Australian economy, but also everything that's going on in the US economy. Opening up those both sides and working out which is going to have weaknesses or strengths is going to weigh up on where price moves. So some ways that we can start thinking about and understanding how an economy works and what influences and factors into that are as such above. You need to think about the GDP, what's in those sectors or industries and how that might make or influence where they're going to go. Now, if you take, for example, the New Zealand dollar and New Zealand as itself, their GDP has a lot to do with dairy milk prices, 14% of it as such, because they export a large amount of dairy produce. So if we see a fluctuation in those dairy prices, then we're going to see it affect and ripple into their GDP, which in turn affects the value of the economy and the currency itself. Now, when it comes to thinking about these economies, I want you to think about them just like you would think about purchasing a stock. So in this instance, when you go to purchase stock from a company, you own a piece of that company. In a country or an economy, it's really just a really big business, isn't it? So we're looking at the idea of when we purchase into their economy via currency, we're purchasing a part of a really, really, really big business that has a lot more factors to consider. But once we sort of start transferring some of those common theories and ideologies, then we start to understand the economy a little bit better. So the next sector, the part that you would look at after looking at what sectors make it up and what industries are making up that economy, is we would start looking at who those main trading partners might be. So in Australia's instance, our largest trading partner at current for exports is China, with more than 32% of exports going overseas to China. Now, at the very moment, at this current time, we have things with coronavirus, supply chain disruptions, and a variety of other things going on. So the value of us being able to actually see what's happening to our own economy depends very much so on the trading partners and how much we're actually exporting. Now, if Australia has reduced exports because of current day events, then we're likely to see a decline in the value of the Australian dollar and the economy itself. The next part that we always want to look at is inflation. Now, inflation is always important to look at because it's a measure of economic health for the country as a whole, but it also gives us a bit more details on what the spending is like in that country. And of course, we want to know what the target rate is for that for inflation, particularly by who is in charge of the Reserve Bank and what the Reserve Bank might be doing. And now, if we were looking at other countries, you'd be thinking about the Federal Reserve Bank or the European Central Bank. We are really looking at who the central bank is, what their policies towards money is, and what their interest rates are going to be and where the inflation is going to go with them. So the next parts we have to really consider are what are the politics within that country? Are we seeing things that are occurring like in Brexit, where you have lots of turbulent, chaotic times occurring which can push the value and affect a lot of other things along the way, including trade and GDP output, and that will in turn affect the value of the currency as well. Now, once you've got an understanding of all those different things, it's about time to put together a picture of that economy in your head. And I really want you to sort of think about that idea of painting a picture of an economy and feeling and understanding what might make up that country and what might influence the price of things. Whether a certain news event is going to be good for an economy or bad for the economy really focuses on how much and how little, or how much you know about that specific economy and how well you've painted the picture for you to really understand and home in on some of the ideas. Now, where might you look for some of the data that you're going to consider in fundamental analysis? Well, some of them might include minutes from reserve banks or central banks of any kind relating to monetary policy. These sort of reports will usually cue in to look at quantitative easing. They might look at the monetary policy and interest rates. They will also define and set out what the targets are for inflation and a variety of other factors. Quite often they have quite a good summary in them as well of all the different events that are currently going on and how the central bank and therefore the economy is likely to respond to them, because they get the data usually before we do. Now, the next places you might look is you might consider using a market watch and offsetting and looking at the differences between currencies or markets of other various types that are all integrated and relate to one another. You might look at the idea that you have several US dollar based pairs and decide that looking at those and seeing whether they're all going up or all going down, on whether that is relating to the strength of one particular currency. Now, the other places you can look is you can obviously look at economic reports or writings by individuals such as myself. But more importantly, the idea of seeing what other people are thinking helps you build that foundation and keeps you up to date with that picture that you're painting in your head at all times. It makes sure that the colors that you're using are going to stay up to date and they're going to be more modern by the time you get to the end result. That way, influencing your overall decision and ensuring that when you do come to making a trading decision, you do have all the information available to you. And of course, the opinions of others. Now, naturally as well, there's also going to be a calendar in this list. Using an economic calendar is the forefront of finding out what might be happening in your trading day and as to why certain things might be happening throughout that trading day. So it's imperative to keep on top of what is actually occurring and what is going to be affecting the markets that you are trading at all times. Now, how economic events affect price. Now, this is a chart that I've got up here of the euro dollar between 2008 and 2017. I have marked out all the different areas where the Fed or the ECB made an announcement about either interest rates or quantitative easing. The blue lines on this chart indicate everywhere that the Federal Reserve Bank decided to either cut an interest rate or add to a certain level of asset purchase programs, also known as quantitative easing. All the red lines indicate a place where the ECB has done the same thing. And you'll notice that in price, we can see that it's actually been influenced. The moment that we get one of these cuts, we see jumps in price, and they can sustain for an extended period of time. In the instance of the very first one in 2008, right around the GFC when we saw rate cuts occurring to try and help bolster that economy and help build it up, we can see price rise 4,100 pips over the course of effectively a year. And that same thing can happen again and again and again in each of these lines. I've marked them out for you to have a look at. So when we look and think about what the power of a federal bank or a central bank might be, this is what it can actually do. So keeping up to date with what's going on within a central bank and the monetary policy of the economies that you are trading is imperative for you to have good results. Now, in each of these instances, I want to go through and give you an idea of what the actual news was, because sometimes the news can be variable and it might be a little bit different. So in the very first instance, we had a Fed announcement coming out saying that they were going to be doing quantitative easing in the first series of orders. From here, we move into an asset purchase program being announced by the ECB. Now, at this time, it was right smack bang in the middle of the 2008 GFC era, and people were running for markets and wanting to know how to go, and everyone was trying to bolster their economy. And this was the way that the Fed and the ECB did it. The idea of quantitative easing is really just printing more money. It's about purchasing some of the things that might be debt cycles or credit ambitions to effectively help pump money into the economy and help people actually buy and spend money in the economy. Because at the end of the day, when people actually buy things at the retail level, it travels up through the system and it tends to be good for the economy, especially from a taxation purpose. So the next steps that occurred is that we had the announcement, as we saw that we weren't getting effective quantitative easing, the economy was not doing so well. So in order to help support it and grow it further, they announced more quantitative easing programs. Number 0.3 and 0.4 were both from the Fed. Then we have again, the ECB goes, now we're going to extend our program and increase the amount of assets that we're going to purchase to help boost the economy. And then that occurs again. And the pattern continues to happen until we get to a point where we have an increase of the rate to 0.5%, which naturally means that the economy is starting to go strong and they're now trying to bring the inflation levels down. All the way through this asset program and the Fed announcements of quantitative easing, we're seeing very low levels of inflation. When inflation gets too low, they try to produce and put money into the economy. When we get inflation going too high, they try and increase the interest rate to sort of curb the amount of spending that's going on. So what are the top 5 economic news events to watch that I think are actually going to help you with your trading? Now, the first one is central bank rate decisions and monetary policy decisions. That is always going to be important. And just in the previous charts and lists that I showed you about price, you'll be able to understand why. The next one is gross domestic product, or GDP, but the preliminary version. We tend to find that the preliminary GDP comes out at the beginning of your sort of month, and 45 days later we get the final. But the difference between the two in data is not that much, and the accuracy is quite on point for the preliminary stuff. So you tend to watch more for that, and you get more of an impact around that preliminary data. The next one to look at is your consumer price index, but the core side of it. Now, the difference between core and a full-scale consumer CPI data is that they take out certain parts that aren't going to help with the valuation on the economy as a whole. So if you were to look at CPI from just the standard size, it usually includes automotive sales and a variety of other things that tend to move out of balance and are not consistent. So they are taken out, and then you get left with the core CPI, which really gives a really good representation of what the economy is and what the spending of the consumer at the retail level is doing. The next one is all employment related events. So this might include something like non-farm payroll for the US, or unemployment rates, and of course the figures for unemployment job claims and anything related to it. Anytime that we see a boost in the numbers of people that have been employed, we can usually account down to that there is going to be more money in the economy for people to actually spend. More people with jobs means more people making money, which means more people buying things. And of course, FOMC meeting minutes. Now this kind of ties into the idea of central bank decisions. However, the FOMC is the Federal Open Market Committee. They run out of the Federal Reserve out of the US. And you will find that most currency pairs that you trade have US dollar denominations in them. And if they don't, they are likely still sometimes cause effects in currencies that you wouldn't expect them to be in. So keep an eye on all of those sort of events that are going on, especially in your calendar, because you will find that they will behave differently at different times. And when you think about economies as a whole and you start looking at some of these events and you scale as to whether it's going to be positive numbers or negative numbers or how that might look as an effect on the economy as a whole, then these will really play a really good point in how you can actually trade yourself. Now, if you liked anything that I've covered in today's videos, or perhaps you want to talk to me about something that's occurred in the past, feel free to send me an email at talktoal@acy.com. And of course, like and subscribe to the video so you can get more great tutorials from us in the future. Have a good trading day ahead and good luck.